Welcome back to another Stock Market Open live stream. Today we've got Hugo Boss down about 8%. You've got Burberry yesterday down a chunk. A lot of these sort of apparel companies really tanking. This is kind of in the face of the narrative of a lot of folks who are looking at Nike as a real buy the dip opportunity, mostly because the dip just keeps giving at this point. Not arguing that at some point Nike won't be a buy the dip opportunity, but in apparel, the dip keeps dipping. This is in contrast to, well, frankly, what we're finding at, it could be the small caps that are non-apparel, or it could be the mega caps. Frankly, look at Apple. You're back to 235. This is the peak where we sat yesterday. Actually, I think, we ran up to 237 yesterday morning. We mostly consolidated yesterday on Apple, which was really unfortunate. And you do have this support line, which I honestly have no idea why I have this red support line right here. But look at how it bounced, like within a penny of that line. Which absolutely wild bounce right there. So watch that line. End phase, you've got about a consolidation yesterday as well. Yesterday was a giant consolidation day. What I think happened is my thesis, could be wrong, but my thesis was that a lot of folks were really expecting, myself included, were really expecting a rally after J. Powie Wowie. And we didn't get the rally after J. Powie Wowie. So I think what happened is you got this sort of frustration amongst traders where people just started kind of dumping their trades. And that led to a consolidation rather than a rally. Now, this is fine. You know, you have to remember there are a lot of people out there trying to make money trading it. And that's great. That's a good thing. Everybody wants to make some dollar hollers at the beginning of the day and then go on to whatever the heck it is that we're doing in our lives. But I think some impatience yesterday did lead to a consolidation / sell-off rather than a rally. And so I think today might be another stab at sort of the green apple, because if you look, you've got Trade Desk over $100. You've got Upstart up 1.7. You've got what is this, Dave & Buster's? Some of these not so exciting. You got DJT down about 9.5. That's just giving back a little bit of the 31 run that you had. Palantir was down a little bit, 195, but Robinhood moving up 1.29. You've got a big 24.39 line over here. I think Palantir got rejected by the 29.29 number. That was, yesterday morning as well. 29.30 is where it ended up getting rejected. I had a line at 29.29. Also within a penny, which is wild. Apple, you've got Bitcoin. Bitcoin's going back for the breakout right here over the 63.8 number. This is very, very, very important. You really, really want Bitcoin to be over 63.8. It's sat in this area for a very long time. You want it over this. It's bullish not just for crypto, but it's really just bullish macro. So you got Enphase up Tesla up 1.3, Enphase up 88 basis points above that 113 level. Remember, we've always talked sort of about that 113.40 number as being a really kind of critical support point there. And the Qs are moving up a little bit. Nvidia's moving up a little bit. Etsy's moving up a little bit. Amazon, AMD, it looks pretty green out there. So let's see if Canadian CPI or retail sales screw this up. We're expecting retail sales on a month-over-month advance basis to be negative 0.3%. Let's see if they're any better than that. Canadian CPI, we think it'll be 0.1 on a month-over-month. Here we go. Oh, we got better retail sales than expected. We got 0 on retail sales. X-Auto, we got 0.4, which is bullish. That's good. And then you've got 0.8 on X-Auto and gas, although it might remove some desire to cut rates so quickly. Canadian CPI comes in lower than expected at negative 0.1 versus the 0.1 expected. So I'd say this is a good retail sales report. And then on import prices, month to month, we got 0 versus the negative 0.2 we were expecting. Import prices ex petrol, we had 0.2 versus the negative 2 expected. So a lot of the trade numbers are coming a little hotter from external sources. But look at this, export prices you had a big miss. You were expecting to be -1 month over month. You got -5 month over month. Export prices, you got 0.7 versus the 1.0 expected. So miss on export prices, high on the import prices, same issue we had with PPI, and then retail sales coming in much better than expected. Now, I do want to see if we have any reaction here in stocks. Upstart moving down a little bit on that. BTC is kind of kissing the 63.8 line on that. I've got a little bit of a red candle there on Apple. Tesla's actually kind of happy about that. Enphase seems happy about that. Rivian seems happy about that. The Qs have no freaking idea what they want to do. Let's listen to Rick for a moment, see what he's yapping about.
On headline, down 1/10 X autos becomes up 1/10. Up 1/10 X autos and gas becomes up 3/10. So all the revisions are positive and all the numbers better than expected. And
oh, yeah, and then you do have the revisions as well. 0.3 on retail sales month over month. That's revised up from 0.1. The -0.1 X auto was revised up to 0.1. That's good for something like all these numbers are good for really anyone selling anything. And then 0.3 versus the 0.1 on X auto gas. So yeah, these revisions coming in positive here.
We're expecting up to.
This is actually pretty good because you don't want to see this roll over into recession yet. We've basically already priced in interest rate cuts. So at this point, you just want the economy to hold up. Like, you got the cuts priced in. Just don't roll over, baby.
And this one actually becomes the hottest number going back quite a ways, all the way to Dece of 22. That's going to take a few points away. Now, if we look at export prices month over month, -0.5 going the other way. That's a big drop. -0.5 follows -0.6, which becomes -0.7. So back to back. Big negatives on the export side of the equation. That might tell us a bit about overseas demand. And finally, on a year-over-year perspective, they're up 0.7, a bit less than expected, following up 0.5. After all of that, we do see that we went from 417 in a 10-year to 419, but that's still down 4 basis points on the short end. We're now currently at 443, which is 3 basis points higher than we were, but still down 3 on the session. So to summarize, less growth. That story is not borne out in retail sales at all. So we want to continue to monitor the positive revisions, and this should be good for stocks under normal conditions.
Yeah.
But it may have Fed implications, although the July meeting certainly doesn't seem to be on the table. And nothing at the Economic Club of New York, according to my Fed sources, really changed that dynamic. Becky.
Oh, you don't even need to listen to your Fed sources, dude. That meeting was so freaking boring yesterday with the Fed. I didn't even do a summary of it. When do you remember Kevin not doing a summary of the Fed? It was so damn boring yesterday. It was a waste of time. That's what it was. And I gave that Dave Rubenstein guy way too many props going into that interview. Like, oh yeah, this guy's gonna get the good questions. He's gonna rizz them up. Dude, he didn't even hold a candle to J Pow. J Pow's like, what's the thing he's the snuffer. That sounds wrong. The candle snuffer. You know what I mean. This thing. Be careful what pictures I'm getting here. There's J Pow right here. Look at that. Oh man, that was boring.
And spending power on part of the consumer. And this is in line with the larger story that we saw looking at the latest consumption report in May, still up over 5% and gaining momentum, I should say, on an annual basis. Again, perpetuating the notion that the consumer, the backbone of the U.S. economy, continues to remain on relatively solid footing.
It's been a volatile number, though. It kind of swings back and forth. Why do you think that is?
Well, it has been quite volatile month to month, and I think this is in part a reflection of the fact that consumers are changing their preferences for those outlays of dollars away from goods towards services. It's also a reflection of, while the consumer is still solid, we are feeling pain. The average American is feeling fatigue from higher costs, from higher borrowing costs, from the resumption of student debt payments. So we're talking about this second derivative decline of momentum, a slower pace of still positive expenditures. But again, there is that sense of fatigue as consumers are continuing to foot higher priced bills.
These are some big freaking words.
Let's talk a little bit about the winners and the losers. Lindsay is right to point out that we are seeing changing tastes. What are some of the beneficiaries, the retailers that have been doing better?
Right. When we look at the last 6 months of spend, two of the categories that continue to do very well, that have done well for several years now, are the restaurant sector. That food away from home is still outpacing.
Bro, no. Restaurant sector is going to tank. No. People are going to restaurants less frequently because they're out of money. It's gone. They're done. They're cooked. No more dollars. I guess if you're not going to a restaurant, you're like the opposite of cooked. Not cooked. You're uncooked. No thanks. Flip the channel. I want to hear that. Talk about the restaurants.
Pretty solid sprint over much of the pandemic here. So what we've seen in the consumer sentiment data is some fatigue about high interest rates and higher prices. But this is not, as Greg said, a consumer that's kind of rolling over. And the labor market is a key part of that. Income is still growing, wages are still growing, and really the economy.
Where's Kevin on the bull bear? You know, probably like I think I'm back really to where the one day I was really concerned that we were really going to have this rollover in the megas. We didn't get it. We did end up stabilizing within the day or two. So, you know, I'd probably say 7.5 to 7.8 seems to be about right. Somewhat in that range. Like certainly not in the all margin direction, but really the data that you're getting is data that's saying, look, inflation's coming in lower and faster than expected, and the economy's holding up. We still don't have the unemployment rollover. It's going to come. And when it comes, it is going to be ugly fast. But we still don't have it. And other data's holding up too. I mean, retail sales just this morning is just another perfect example of, hey, you know, we're getting to, we're in an environment where somehow somebody continues to be spending. Now, it's entirely possible that the spending is just amongst wealthier consumers. I mean, this is, you know, yesterday in the course member live stream, I mean, we had, you know, I don't know what, 3,000 people that watched my course member live stream or something to that effect. And, you know, we're analyzing what the banks are doing and what the banks are warning of. And the banks ain't that concerned. And if the banks aren't freaking out, your boy Kevin ain't freaking out. So I was nervous that the market, you know, last week was going to start pricing in some bad bank earnings or an unemployment recession or something. But again, we stabilized, as I said, within that next 24-hour period, and everything was fine. I do think this market is very primed to rolling over very quickly and suddenly, but not now. I mean, at least not based on this data. It actually seems pretty good. You know, I keep reading. You know, I do this. I don't talk about everything I read, but see if I have it convenient here. Okay. You know, I thought this was such a great line in something I read yesterday, and I think you might really appreciate it as well. It was pretty good, and it somewhat goes along with what I'm saying here. So look at this. It's from T.S. Lombard. I'm not trying to play confirmation bias here. I'm more trying to say, like, this is actually really interesting. Like, I had not thought about this perspective for the inverted yield curve. And so, you know, seeing them say it, I actually, hey, you know what, shout out to them. I find that pretty fascinating. Anyway, so T.S. Lombard, yields have been inverted since October of 2022. The bears said this was the classic recession signal. It became a key part of the global recession scare that followed. But the yield curve predicts rate cuts, not recessions. And the Fed is not always cutting in response to an economic downturn. In the past, It has also cut rates to deliver a soft landing. See 95, 98, and 2019. I'd say 95 is probably your most realistic soft landing there. The others were little bumps in the road. But, I appreciated that. So I actually write that one down just because I kind of respected that. TS Lombard, inverted yield curve does, quote, predicts rate cuts, not recessions. That's a line right there. Now, rate cuts can often come with, a recession. But they give the example of 1995, 1998, and 2019 rate cuts as soft landings. I would personally really only highlight 98 of that. 95. I would really only consider 1995 a soft landing. So it's rare. I don't think anybody's disputing that it's rare, but can happen. So, all right. I don't know. I like that. So, that's a good point too. Thoughts on the market sell-off near the election? Do you think it's because the market knows Trump and Biden equally, and that may not be a? Do you think the market knows a Trump and Biden administration equally, that there may not be a market sell-off? I don't know. I mean, I just look at sort of like the historical approach. Generally, before an election, you have a sell-off. Generally, after an election, things rally. Yeah, it doesn't almost so much matter who wins. I think it'll happen. But usually, it's like September, October. But anyway, look at this. Shopify, they started really moving before the retail sales data and moved even more after the retail sales data. So Shopify is excited here. Affirm's moving up a little on this, 1.5%, though less clear. Trade desks up about 1. Bitcoin's really getting stuck at that 63.8 level. Once we really, in earnest, break out of 63.8, I think this goes pretty heavy here. We'll see. No guarantees. Apple's at 28 bips. Enphase is up 121. Tesla's up 138. Qs, nice slow move up here on the Qs. Had a little bit of volatility here when those retail sales numbers came out, but actually had some positivity here. Nvidia slowly moving up. It's the slow crawl up. What is this? Look at Amazon on that retail sales data. People buying the dip on Amazon. Now that actually kind of makes sense because remember, Amazon was really testing that 200 number there for a while and really got rejected there quite a few times. Actually, like every single time it hit 200, it seems like it got rejected. But oh well, let's listen over here.
Trump bringing aboard someone who has argued that the U.S. should...
Somebody says, why do you work so hard? You're crazy. I don't know, man. I just like it. I get anxiety when I'm not working. Will you make a video on Project 2025? Probably not, because like no mainstream candidate is really like saying, oh yeah, that's my platform. So it's kind of like, why talk about it? That was my thesis. And what are your thoughts on the Sahm rule? Yeah, see how the irony of this, and I've touched on this, but just to reiterate it, but the irony of the Sahm rule is it seems like we're getting really close, but there's something crazy that happens as we keep moving on in time and the unemployment rate doesn't pick up violently. That Sahm rule will actually ironically start going down rather than up. So the reason for that is what the Sahm rule does is it measures the 12-month moving average of unemployment claims, and then it compares the delta between where we are now to then. So if the 12-month moving average is 3.7 and we're at 4.1, then the Sahm rule's at 0.4, right? But that moving average is moving up over time. So the longer it takes for the unemployment rate to go up, like if we sit here at 4.1 and we sit stable for a couple months in a row, that Sahm moving average is just going to move up. And the Sahm rule, ironically, the delta, the difference between the two, will actually go down rather than up. You know, so you're going to be in a place in a month or two from now, unless we have a big spike in unemployment, you're going to be in a place where people are like, oh, the Sahm rule went back down. I guess it was not an indicator. You know, really, the Sahm rule is a tool of measuring rapid, very rapid increases in unemployment. And so we're not really seeing that right now. Shopify got a BOFA upgrade. Why do people care what BOFA says? But no, I mean, good for Shopify. I want to look at the shop valuation. And this is the kind of stuff we usually do with the course member live, but I'll take a look at this. I think 330 is like your euphoric top out for Tesla. Like, I think we should be able to hit 295, but I think 330 is your euphoric top out. All right, let me see here what's going on. Shopify raised to buy. Okay. Let's see what their valuation is these days, eh? See, I said that because they're Canadian. Oh, maybe they also went up on this, what's it called? Oh, that's like a 2.5 peg. And they are a software biz, so maybe that's not that terrible. Let me actually run the numbers here. I'm just kind of ballparking in my head. 26, or... they may have gone up because of CPI in Canada as well, coming in low. 106. Our CPI is going to come in low, too. Look at, like, the leading rent indices. Ooh, boy, it's all tanking. Kind of as, it's so funny, like, a year ago, I'm like, I don't know, I think inventory is going to skyrocket for real estate. Like, I've played this game before, and people are like, what, you're crazy. No, man, there's so many buyers. Now inventory's skyrocketing, especially in the areas I said, the overbuilt ones like Texas and Florida. Freaking called it. It's almost like I flew around to all of the different areas and interviewed all the agents I could get my hands on. Okay, that doesn't sound appropriate. I interviewed all the agents I could possibly talk to, and realized what was going on in the market before it became public data. Oh my gosh. Anyway, 2.4 on Shopify's peg. So, and then where do we sit on the balance sheet here? Shopify. Because sentiment I think is pretty bad, which is actually ironically a good thing, because you want to be contrarian on sentiment. Yeah, I mean, the stock's definitely recovered from 23, but it's still down even from the 90 where we were earlier this year. And then, you know, they're not going to go BK anytime soon. Okay, come on. Let's just look at their balance sheet here. Revs. Are we actually making money? No. How'd they lose money in March? How am I going to get a positive EPS? What happened here? Other expense, 342. Oh, man. Low margin. I want to know what happened to that other, but anyway. Do we have a cash flow statement here? Yeah, we do have cash flows. About $250 million Canadian dollars of cash flows in 3 months, which is actually really good. I mean, I know in dollars that's only like $20, but it's okay. So current assets 6.4, marketable 6. What are our debts over here? Debts. Your balance sheet is actually excellent. It's actually really good. It's a good balance sheet. We've got cash flows. We make money. This could have been a bad quarter. Where is this? I want to know what other was. Other. Well, I'm not going to get it because they put their financial statements in as pictures. Okay, so I have to look up 342. Oh, come on. Okay, free cash flow. There's got to be a reason why. their net fell. I will get to the bottom of it. I'll go into their SEC statement and I'll figure it out. Shopify investor relations. I will get to the bottom of it. I will find out. Okay. So, SEC filings, earnings reports, 24, Q1, earnings press release. Would you just give me the darn document, you losers? They make it so hard to find the quarterly report. I'll get to the bottom of it. Because once I have it, I can find out what that 342 was. Whatever. All right, we'll get to the bottom of it.
Strength part people emphasize a lot, and that's absolutely right. And husbanding and revitalizing our defense industrial base and our military resources, but also the openness to a modus vivendi with China to avoid a war if that's at all possible, because nobody wants that. I certainly don't want that for Americans.
Good. We'll be probably seeing you in this next administration in some capacity. Can you tell us what would you like to do?
Well, I wouldn't presume. I'm just thrilled to support this ticket, and I would be honored if they would add. I'd be honored to serve, but I certainly make no presumptions about any role. I'm just excited about where this is going, and I do honestly. I don't think President Trump is exaggerating when he talks about the risk of World War III. I am personally very motivated because I'm very worried about this, and I think we need the right policy, and the policy that we're on right now is not the right one, and we need change.
Great. We will see you again soon, hopefully. Bridge Colby, thank you.
Always a pleasure, Joe.
Okay.
I found it. In the 3 months ended March 31st, we had unrealized loss on equity and other investments of $373 million, which included $351 million in unrealized losses in investments with readily determinable fair values. Okay. Additionally, we had a net loss, something else, whatever. Okay. All right. So that's interesting. I mean, that's basic. That's outside of their business, right? Like, so what? You lose money investing. Like, the core business. How's the core business doing? Well, the gross profit is good. The margin on the business is positive. And if it weren't for that 342, you'd be positive EPS here. So, yeah, I'm not too offended here. So actually, it's not a bad gig. I'm not that horribly opposed to what I'm seeing at Shopify. So just something to pay attention to. All right. Okay. Alrighty. Very well. So next. Okay, what else is going on here? So, a firm's not really moving on this stuff. Trade Desk is going up. Bitcoin's still struggling at 63.8. It's an important line. Apple went down a little. Enphase is up 1%. Tesla's up 1.3. Qs are only up 20 bips. Nvidia's up a bit. See how we're doing. Let's see here. Somebody says SoFi is no longer barcoding. Oh, is that true? Well, I mean, it's a pretty low liquidity one, but it's up 1.5. It was up 5 yesterday, 5%. All right, what else? Trump implemented 64% of the Heritage Foundation's proposals during his last admin. Go to their website. What prevents stocks from Tesla from going parabolic like Supermicro did? I mean, I know it kind of just did. Is that a one-piece jacket? It's a one-piece, yeah. That's kind of cool. It does look like that. Mm-hmm. Somebody says G-Mizzle. Oh, yeah, look at that. GME's trying to move, too. All right. What else do we have over here?
Joining us right now is Devin Ryan, Citizen JMP Senior Research Analyst. I want to walk through the headlines here, but maybe I should ask you, what is your headline out of both of these numbers?
Good morning, Andrew. I think, it's a good quarter. The investment banking and trading, we're in the early days of a recovery there. And so I think we're seeing some of that come through in results today. The flip side, I think why you're seeing a little bit of pressure on Morgan Stanley this morning is still seeing some headwinds from interest rates around deposits coming down, and then also the higher cost of deposits because of that. So I think that's what people don't love. And then they did have a little bit of a lighter net new asset quarter in their wealth management business as well.
Of all the banks right now, if you could own one, which one would it be?
So I'd actually own Goldman Sachs, so technically a bank, but where you want to be exposed right now is capital markets. As I mentioned, investment banking, there's probably 30-40% upside to M&A revenues. Equity issuance could be up 50% plus. And so I want to get exposure there. And then Goldman's really exciting right now because their asset and wealth management business is really expanding pretty rapidly. So I think that's going to be the next leg of the story for Goldman, where you see, alternative assets is $500 billion at the company, which puts them in the top 5 for all its players, and only 60% of those assets.
Boring. So boring. No.
This is
Oh, yeah, I'd rather watch their commercial than hear about the alt assets that Goldman has. That put me to sleep. This commercial's more invigorating. All right. Watching this Bitcoin candle trying to break 63.8 is more invigorating. All right, what's going on with oil? Everybody keeps talking about oil. Oil traders betting on a price rally are facing the tightest period of the year for global supplies. Yeah, oil's at 83 on the international. Loony drops as Canadian CPI in line. Well, in the month-over-month came in low. Retail sales data undermine case for more aggressive easing. Well, that's one negative way to throw it in light. The other is, hey, look, we're not crashing yet. I prefer the we're not crashing yet POV, mostly because, September rate cuts are already priced in. We're good. We don't need July rate cuts. So retail sales coming in a bit warmer is great. A bit warmer, not recessionary yet. I like that. That's the way I'm gonna say it. Not recessionary yet. So it's a good thing. All right. What else? Morgan Stanley adds to spate of lackluster Q2 reports. Fine. Morgan Stanley shares, after initially rising, are down 2% in pre-market. Wealth management net revenue missed, offsetting a beat in net interest income. PNC shares are down. Tougher consumer backdrop. Fine. Rate bets imply Bank of England may ease aggressively into the end of the year. Right. Well, I think that's just sort of a way of comparing to, or looking at the probability curve. We're at 1.06 cuts priced in for September, 2.6 December, 3.3 January, and none of these moved off of retail sales. All right. Boring. Okay. Somebody says, what do I think about JD Vance? Yeah, I made a whole video on him yesterday. You can see that. I also explained the EV subsidiary subsidies thing on my JD Vance video and on Twitter. You can check it out there. In short, it's baloney.
It begins right now.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. Stocks do look to continue their climb, with the Russell aiming for 5 straight 1% gains. Retail sales better than expected. Yields bounce a bit at the short end after the 10-year briefly hit a 4-month low. Our roadmap begins with quarterly beats for both Morgan Stanley and Bank of America. Brian Moynihan is going to join us in the next hour. Also ahead, Amazon Prime Day is underway, and Elon Musk reportedly committing $45 million a month to a new pro-Trump super PAC.
Yep.
Let's begin, though, to market reaction to those quarterly results from B of A and Morgan Stanley. Not all of these names are working pre-market, Jim.
No, I think it's very interesting. Bank of America really clean. And I like it. Net interest income, 12ing, that seems to be the number, of course, everyone's looking at. And how much you're making off your deposits, which they're making a lot of the deposits. They did it without having a lot of investment banking. They had good numbers. Morgan Stanley, which my child trust owns, his stock had run very big into the quarter. It's the second best performer after Goldman so far after last earnings season. But what bothered me here, a la Schwab, is they're just not getting the accounts that I thought. They're just not making enough money. But I will say this. The one thing you have to recognize is that Wells Fargo really got hit on Friday. And then it's been up since, as people realize, wait a second, if the Fed's going to cut rates, here we have the beneficiaries. It's Morgan Stanley and it's Wells Fargo. So before you just dump them, recognize that these stocks overnight have become plays on what Powell does. And you want to be levered to what Powell does. And they're plays on regulation. And you want to be levered if you think that Trump wins. Holy cow. I mean, regulation.
Those are the two big narrative engines at work right now, right? The prospect of better, easier regulation and lower rates.
Well, it'd be interesting to see that one of the things that happened with Bank of America, people were worried post First Republic and Silicon Valley Bank that their bond portfolio was an issue with Bank of America. That was a total canard. It just wasn't. I think it was spread by short sellers. I know that that's a tough thing to say, but I mean, honestly, it just meant nothing, and their things are rolling off, and it's very good for them. Bank of America is just very good. I'm glad we have Brian. It's just a really good quarter.
Net charge-offs, flat quarter on quarter. Jim's point about hold to maturity rolling off about $10 billion a month.
That was another thing I was looking at in the bank earnings too, was net charge-offs. There were some where you saw little bounces, like over at JPM and CNI commercial sector, but you didn't actually see anything that was like, oh my gosh, this is so scary. And I was really surprised. I was really looking for, some like entertainment to make a video on, frankly. And I'm like, nah, I'm reading this and I'm like, there's nothing here. It's not even worth covering. It's so boring, which is a good thing. I guess it's kind of what you want.
It's a fun thing to talk about, but
Very
not
fun.
beyond that. I mean, it's like talking about Amazon Prime. I mean, I have insight to Amazon Prime, but it's a little bit anecdotal. It took me forever to. I waited. How else do you make money in this country? I waited till this morning early on, and I had to keep pressing that button to get out of the checkout cart because there were so many other people pressing the button.
Yes.
I don't know what he's talking about. All right. So what else we have here? What are the actual chances of lowering rates if there are if there's no reason to do so? Well, I think there is a reason to do so. It's the beginning of the weakening in the labor market. Right, it's the beginning of unemployment rates declining, and that's the concern. That's what you got to pay attention to. So, because once that really self-sustains, you're kind of cooked. Pricing power: Delta versus JetBlue. JetBlue offering similar quality as Delta, but only charging half the price. Delta stock stump while JetBlue small cap is up 12% for the month. Nice, JetBlue. I actually like JetBlue. I always thought they were pretty good.
Stanley needs more IPOs. They have a terrific system where, if, say, Silicon Valley company comes.
As a consumer, I haven't looked at their sheets in a while. Who knows? Maybe they're a freak in the sheets.
Although that is apparently looking brighter.
Yes.
Some of the reports today out of S&P regarding the pipeline.
Yeah, and look, if you think that we're going to have an M&A anything like what we have now, I think that the FTC is the most deal that I've ever seen. And the Justice Department isn't so hot either. So I don't know who, the President Trump, if he becomes president.
Do I think September will be too late for a cut? No, not at all. I actually think it'd be more concerning if they cut in July because they're freaking out about something. So somebody said, Max here says that the Wall Street Journal story is not true. I don't see that. Where is that? Elon Musk went from being an Obama voter to pledging $180 million to elect DJT. He actually replied to that and said, yeah. So I don't know if he says that's fake. It sounds to me like he's agreeing with it. Anyway. All right, what do we got over here?
About how the customers are actually going a little more aggressive. Not getting that either. These companies really need deregulation, and they need a better IPO market.
You also said you think rates go back to zero this decade. By 2032, I said within a decade. I know it's not that big of a difference, but I do think 2032, 33 will actually be lower than where we were before. Kind of crazy, I know. But yeah, deflation will push us down quite a bit. Okay, what else here? Oh, nice to meet you, Kevin. Yeah, 45 million per month, that's right. That's crazy. Elon and his one-word replies. Yeah, no kidding, huh? What's going on with Palantir? Well, I think we got rejected at 29.29. Okay, let me see your story here. Elon Musk. I can't link it. All right.
It's funny because that is the Warren Buffett Bank. Remember when Wells was the Warren Buffett Bank?
I do remember that.
Yeah, not
remember
anymore.
Those warrants back in the day.
Yeah. Now, obviously, Charlie Sharp benefits. Charlie Sharp's not going to say, listen, the regulations are just going to go. But it has to do with Federal Reserve scrutiny. And I just don't think the Federal Reserve scrutiny is going to be as critical as it is right now, where they kept reacting to what happened with the mini banking crisis. And they've really, I think, as what Larry Fink talked about, we need them unfettered. I mean, there is a fettering, so to speak, not a great verb, fetter, but I do think that the Federal Reserve being less restrictive is going to cause a lot more loan growth. And by the way, the loan growth that Bank of America is telling, it's just slowing too quickly.
Right.
And Powell has to be worried.
Right.
He has to be worried, but not panic like Goldman.
We'll also talk to Brian about commercial real estate, where they do see some lower losses in office CRE.
I talked with them. You know, I remember when Barry Sternland came on our network. He's a legendary investor, talking about a bank failing every week. Well, how about a bank succeeding every week? That number for commercial real estate made me feel very good.
Yes.
Maybe I want to go buy.
Yeah, I don't know that this is Elon denying this. I think he's calling them fake news. Because I think this is called, I think he's calling the publication fake news. But, I mean, it does make sense. He's kind of replying to this, saying fake news, committed around 45 million. He's really famous at these, cryptic replies where it's, partly true, but then not entirely true. And so then he calls it all fake news. Because he just replied implying that he supported it. See, right here, Elon Musk went from being an Obama voter to pledging $180 million to elect DJT. The woke left really effed up badly. Yeah. So here he says, yeah. You know, and then somewhere else he said fake news. I don't actually see... Oh, here's the fake news reply 6 hours ago. So an hour later, he says, yeah. So, which one is it? You know, it's very, very confusing. You know, it's probably fake news because he's actually donating more.
Battery life and you need AI. And I don't know if people understand the change. This is the first real change since we had the 286 going to 386. And people are acting as if it's not a refresh cycle. I mean, it would have been a refresh cycle anyway, because it's been 3 years from when there's been the last wave of buying. But I think it's very telling that people are so bearish they don't even get that there's a refresh cycle. Now, they're bearish on all those companies, but they're so bullish on the Russell. And that's because that's who really benefits from dereg. I mean, a lot of the bigger
and
companies,
lower rates.
Yes, lower rates. And remember, a lot of the bigger companies like regulation. They know it smothers the small and medium size. Well, you look at the Trump Vance ticket, they're for small and medium size. They really are.
The Russells obviously been an important story last few days. We mentioned at the top of the show going for 1% gains in a row. That's only happened 5 times. Thanks, Bespoke.
Well, yeah. I mean, look, I think that there is a feeling that this ticket is going to make it so that there is real growth in an area that's been hurt by regulation the most. I mean, when we look at regulation, who gets hurt? It's small, medium-sized business because they can't figure out the regulations. The big guy, you think McDonald's doesn't know how to open a restaurant? But if you're opening up your second restaurant and the regulators come in and they say, listen, I'm giving you a C, you know, wow.
That's a big conversation.
All right, so let's see what some questions are that we have over here, because this is an interesting talk about lower regulations maybe helping smaller biz. I could see that. Did Elon ever confirm, deny the robotaxi event being pushed back? Yes. Small design change to the front. Let's see here. Let's cut the Elon's being transformative nonsense. He's also doing this for Republican preferential treatment on AI and EV regulations. Of course he is. Of course. Let's see here. Elon Musk for president 2028. I've been watching a lot of Peter Schiff. He's been calling out there will be a crash or recession as soon as 2025. Nothing's changed then. I love Peter. I think he's got great insights. But we've also, I think every time I talk to him, there's a crash coming. So the question is, how soon is the big crash that he's talking about? That's the tough question. So, I mean, there's going to be a crash at some point. There's no doubt about that. He's absolutely right. Question is, you know, how much of the bull market are we going to miss? Betting on it right now. I don't know. Who knows? Who knows? So, let's see here. Q's at 22 basis points. Trying to move up here. Trying to move up. It feels a little bit like a directionless morning here. You know, Enphase is trying to hold on to 114. Tesla's trying to hold on to its percent. Bitcoin's waiting to break through. And you got a lot of potential here. But, look quiet. GME's moving up 3.7. Alrighty. Somebody has a RuneScape name with pretty high stats, apparently called JD Vance. People are saying it's fake. But, that's kind of funny. Somebody, somebody switched their name to JD Vance a few weeks ago. I see. That's funny. Yeah, look at this. That's actually kind of a brilliant troll. I love this. This could be anyone, but I'm hoping it turns out to be JD Vance. These are great stats. You know, 87 attack and defense, 98 on strength. This guy hits like a beast. 94 range, 95 magic. Nice. Nice. Crafting, 90. Oh, wow. Yeah, that's pretty good. Oh, I used to do so much hunting. And then here somebody says previous name. Just looks like somebody switched their name. No 99s. Prayer is his second lowest skill. Unbecoming. That's funny. 77. That's a good one. Versus Runecraft. Lols. Lols. Yeah. So, do you think we've seen the top of rates this decade? Oh, yeah. Almost certain. I don't think you're seeing a second wave, a real second wave here. You had a little heartbeat there at the beginning of the year, but it was fugazi. Woodworking, pretty good. That's construction, yeah. Yeah. All right. So, yeah, a lot of people keep saying, oh, JD Vance is terrible for Tesla, Bro, you really got to follow me at Real Meat Kevin, and you got to stop falling for this bullshit people post on the internet. Like, people just post trash on the internet, and like, the level of depth is so bad. But here it is. See, like, JD Vance wants to remove the $7,500 EV tax credit and instead enact a $7,500 gas tax credit. And then people are like, oh my gosh, Elon Musk supporting JD Vance. Oh, dude. Oh. Here's what I wrote. JD Vance removal $7,500 EV tax credit. Many in the Tesla community are freaking out over Elon Musk supporting JD after he introduced this. Let's be clear. The bill was introduced during the UAW strikes. It was likely a messaging bill, and the bill died in committee with no action. It's a nothing burger. And then somebody's like, oh, but it implies his stance. And then I said, not necessarily. Ohio is home to Ford, Fiat, and Honda, and many other manufacturers. Union support is critical for a politician. It's messaging, it's politics, and he's not the president. Like, saying, oh my gosh, JD is going to take away the tax credit. It's like saying Kamala's going to do something. And I'm not trying to, like, disrespect somebody who's, potentially going to be the VP here. Just saying. Saying that JD is going to take away your tax credit is legitimately like saying Kamala is going to actually do something.
Inside of the Tesla shares going up on a tear. Shonali?
And more bank earnings out this morning. Bank of America said net interest income would climb by the end of the year. Meanwhile, Morgan Stanley's wealth management unit missed on analyst estimates here. Joining us now is Stephen Bigger, Director of Financial Institutions Research at Argus Research. And Stephen, you look at what had happened this morning, Morgan Stanley being among the most expensive of the pack from a price to book perspective here. How much room do they have to miss on a key metric like that?
Well, yeah, missing.
I don't know that he said this. Vance believes the VP has the constitutional power to reject the state's numbers and pick a winner in an election. What you're referring to is the certification of the election. And what he said is he believed that the voters' concerns should be heard. And essentially that the certification should have been delayed until the concerns could have been allayed. That's a little different. But I get it. I mean, I see what you're saying. You're saying vote blue. It's, everybody's entitled to their opinion. I get it. But yeah, I think that clarity helps at least a little bit, because it somewhat implies like, hey, if there's a problem, investigate it. If there is a problem, right? Then that's what the debate comes down to.
For investment banking now.
How much of a tailwind could rate cuts start to provide some of these banks? You think about Bank of America finally guiding higher on net interest income through the end of the year, but also telling analysts now that the benefit will be smaller going into next year and taper off into 2026. How do you handicap that?
Well, at least it was good to see that the narrative has been unchanged since the guidance after the first quarter, that the second quarter would be the trough. So we didn't expect an enormous rebound. If you go back to the beginning of the year, most analysts had expected a deeper rate cuts this year. In fact, we would have already started. So we've not done that. And therefore, banks are still facing some pressure from higher deposit costs. Just not getting that net interest margin improvement, nor the loan growth, which has been very anemic, again, thanks to higher interest rates. So I think at this point it's safe to...
Oh, he's so boring.
Remarks from JD Vance there. This is a Republican Party now that views sort of coastal elites who run large corporations, particularly in Wall Street, as potentially on the opposite side of a giant cultural war that's happening in this country. And that leads you to a whole bunch of different conclusions. One conclusion the economic populists have is that policy has been focused too much on consumers over the years. That is, making prices cheaper for consumers when in fact it should have been focused on making wages better for workers. That leads you to a whole different set of policy choices on a whole host of issues. Take, for example, the question of defense stocks. Saw some analysis yesterday that this was potentially bullish for defense. But in reality, I think you got to look at cutting back on Ukraine spending as being bearish for defense stocks, at least in the very short term, because a lot of that spending is going to American defense companies. And then you've got to look at the approach to the dollar. Here's J.D. Vance's comment about the potential of devaluing the U.S. dollar. He said earlier this year, devaluing, of course, is a scary word, but what it really means is American exports become cheaper. Again, the idea here is that devaluing the dollar is potentially a good idea because it makes wages better, it increases exports, increases opportunities for American workers. I think that's the way you need to understand this shift in the approach to the economy from this Trump-Vance ticket, guys. Back over to you.
God, it's brilliant analysis, and I'm not hearing it anywhere else. Pro-worker is exactly the biggest fear that the Democrats have, because this country has gone, I agree with Eamon, I think it's actually going too far for the big. And if you talk to paychecks, it's the small and medium that's been crushed by the regulation. And they can't hire more people because of the regulation. So paychecks would tell you, and that's the largest small and medium-sized business payroll company, they would tell you this is exactly true.
We're going to talk a lot more about it, of course, and how it applies to a bunch of the sectors Eamon mentioned. Eamon, thank you for that. We'll get Jim's Mad Dash countdown to the opening bell. Got some news on UNH today, Disney, Match, GM, and a bunch of calls on Shop, Reddit, Starbucks, IBM in a minute.
Boring. Not as boring as the last guy, though.
With a really tough decision. They're going to have to decide whether or not they can campaign on the issues. And I think the American people...
Oh, talking about classified dog case here. Okay. All right. Well, I guess that's your finance morning over here, huh? Anyway. Okay, so... What else? What are we going to do here? You know, Hugo Boss down... what are they trading for in the European markets? Hugo Boss is trading for like $37 in the Euro markets. Divided by 3.84. They're trading for like 9.6 times. They're trading for a bargain. They're trading for like a one peg. That market's just slowing down. Very interesting. All right. Let's see here. So, you've got a little bit of a slowdown into the open here on Tesla. I've seen this happen many times, though, where you slow down into the open and then the suckers just pop. No guarantees. You got BTC. We got a little bit of a bullish move here. If we can break 63.8, that's really going to push some bullishness. Q's up. GME is lagging a little bit as it's trying to get into the open there. Shopify is really trying to move. And let's see here. Trade Desk, Hood, Palantir trying to come up again a little bit. Enphase sitting on 114. Nvidia somewhat trying to bleed down a little bit. I don't know. Feels a little directionless today. Oh, look at that. Ubiquity getting rejected at the 169 yesterday. Yeah, Ubiquity's just been killing it. So good for them. Yeah, I'm a big fan of that company. They got great products. Is this like an ex-Apple engineer or whatever that made the company? Is like, oh yeah, I could do better than this. I think that's kind of cool. Good for him. All right, what else? 6 minutes to go until the open. Nobody knows what's going to happen. Elon Musk, robotaxi plan shows he gets cars, but not people. Ooh. Bloomberg opinion. You won't believe it. Elon's going to miss the deadline. Oh, no, we can believe it. One analyst reported a 2-month delay. Blah, blah, blah. Okay, this person's just sort of bagging on broken promises from Elon. Okay, that's kind of boring. Enough of that. There's enough negativity out there already. And then what was the GME news this morning that's getting this thing moving? GMizzle yesterday. It's just social mentions. Lots of social mentions. How about DJ Tiz? DJ2. Still down about 9.5 in the pre-market here. Yeah, a little bit of slowdown there and open doors move. SoFi's trying to move. Affirm's trying to move. Trade Desk's got 1%. Yeah, I'm starting to see some green candles here. As we get closer to the... Oh, I didn't see it. Where is it? GME has failed to deliver settlement. Really? Oh, okay. I haven't seen it. Yeah. Oh well. Alright. What else? I used to have TDS as well. It helped me to start watching both sides in the news and doing some of my own research. Yeah, it's kind of crazy. The way media can kind of shape a narrative is pretty powerful. Make a YouTube video explaining the devaluation of the dollar. Devaluation of the dollar is very simple. The value of the dollar goes straight down. It's that simple. So, get your butt in assets. Like real estate, or stocks, or business ownership, or startup, or whatever. So, by the way, thank you to anyone who was applying. We got some good attorney applications. Oh boy, I need more coffee. Ugh. We got some good attorney applications for a second in-house. And I think we're just finalizing a bookkeeper application, and then we're fully hired again, which is kind of cool. So the team groweth. Oh boy, Kevin, get more coffee. I probably stayed up too late yesterday. What were we watching? Oh, we were watching. Oh, Beekeeper. That was it. Lauren's like, we're watching this. I'm like, I don't want to. Hey, Kevin, for your courses, is there anything related to investing in economics in general? Oh my gosh. The vast majority of my courses are based on fundamentals, long-term investing, long-term economics. The stocks and psych course is like 90% long-term, 10% trading. The real estate course is 100% long-term. Property management, rental renovations, 100% long. Making YouTube videos, one, or the sales ones. The vast majority is all long-term. Thank you for asking, though. So, any tech or video editing opportunities at the moment? No, not at the moment. Yeah, you can't have an internal auditor. You need external auditors. Yeah, internal CPAs. Kevin should create a new ETF called the Nike Swoosh. I already got an ETF that's a Nike Swoosh. Yeah, I don't know that I really. I mean, we're only like halfway into it. Let's just say, without spoiling anything, when you get to the gas station scene, it just turns a little ridiculous. So I don't know if I'm like convinced that it's really that good. So Lauren and I, we kind of looked at each other. We're like, this is an eye roll. So we'll probably finish it out, but it's certainly no Bourne, that's for sure. And who doesn't love Bourne? All right. Good luck today. Go make some money. Go make mommy and daddy proud.
put some numbers on the cyber costs. Some 92 cents for the quarter.
More than that. It's one of the worst hacks I've ever seen.
Let's get the opening bell on the CNBC Real-Time Exchange and the big board at Anheuser-Busch. And Team USA getting ready for the Olympic Games in Paris, just a couple of weeks away.
All right, that's pretty green. It looks like we're trying to start forming a red candle on the Qs. Tesla's going not sure what direction. Nice bounce on Enphase. Good bounce right here, right on the 114 line. I like to see that. That's really bullish. Bullish Enphase today, bullish Tesla today, okay? Maybe we're getting some bullish energy today. Enphase Tesla, nice big fat green candles. I like it. Robinhood's going down. Bitcoin stable. Trade Desk going down. Let's see what else here. Shopify's got a red candle coming in. Open Door's got a red candle coming in. Red candle on the Qs. Etsy sideways. Enphase and, oh my God, Enphase and Tesla are kicking booty today. Let's go. Let's go take a look at NVIDIA. Oh, NVIDIA has a little bit of a heart attack. So NVIDIA is down about 76 bipadudes over here, and a little bit of a heartache, heart attack. I don't know what you want to call it. DJT's got a green candle coming in. Open Door's trying to come back with a green candle here. There we go. Let's average that. Get rid of those average candles. Qs are trying to come back. Very nice, very nice. And Upstart's moving. Tesla, come on, baby, push it. No, Enphase. Trying to figure out a direction here on Enphase. It's basically averaged out the open so far. Let's listen in over here to see what they got to say after the bell here.
And Schwab is the other one that I think a lot of people felt like the worst is over Schwab. Well, look, the stocks ran. That's the culprit, not the actual quarters. It's that people got too excited. No one gets that excited about Bank of America. It's not that excited.
Oh, NVIDIA's got a big green candlestick. It's coming back. NVIDIA's coming back to life. Qs are now up 35 basis points. Here we go.
Speaking of exciting, this is an interesting day in which consumer discretionary will lead better than a 1% gain, Jim. I guess that's
the retail sales
number.
The retail
Can you
sales.
Believe it? Yep.
I mean, we've got this weird situation, Carl, where things are happening the way they're supposed to. Oh, strong retail sales. Oh, let's go buy retail. I mean, the market is very 1995. Now, we had some people talking about how after you get the rate increase and start coming down, the market does very well. We have a market that's making common sense. Oh, this looks good. But then you saw a downgrade of Dollar Tree today, and that's because tariffs. And there's no doubt, I mean, J.D. Vance is Mr. Tariff. I mean, he's incredible on tariffs.
Yes. So now we have to start dissecting.
Nobody knows tariffs better than JD. That's basically what Jimbo's saying here.
Now, when you read...
I don't know that I necessarily agree with that, by the way.
Talks a lot about...
JD was... When I've read economic stuff on JD, it's really that he's of the mindset that, hey, in order to really make more money as the government, you have to foster growth. So you remove regulation to foster growth, let the economy grow, and when the economy grows, then things start looking pretty Gucci. I kind of resonate with that. I thought that was fair.
And look, I think all of us want more self-reliance, but also there's such a thing called bad luck. And a lot of people in the book I thought had bad luck because big steel mills close. That is not the fault of the people who work in those towns.
While we were on the subject of UNH, Jim, just the idea of hacks. This Disney news regarding some of their Slack information in which conversations about ad campaigns and HR personnel were reportedly leaked.
This stuff is so bad. I thought more should have been made of the ATT leak, which, by the way, was Snowflake. As they understand it, that was a frightening leak, the ATT, with Snowflake being part of the problem.
That's right. That was Friday.
And that was not good. I mean, look, Disney's been a horrible stock ever since Peltz left. Now, that's the last thing they want to hear. That's why I said it. There you go. Yes. I mean, I've invited you, Johnson, on the show many a time. And when the quarter comes, I hope he sits right there and explains to us why this is the time to buy Disney. He can throw in this time to buy PepsiCo, too.
Okay, I think we're trying to go green here. It's really, really tough to say. There's a lot of volatility right now, but Nvidia's coming back. And then not only ish, you know, as I say that, it's like you get a red candle here, but it's down about 0.5%, and it's really trying to bottom out over here at 127.38. And so let's see what happens on Nvidia. Then you've got Etsy is trying to move up. The Qs are really trying to figure out what it is they want to do. Like, who do they want to be for a living today? So then you've got GameStop, which is trying to figure out its direction too. Which the same thing was true of Tesla and Enphase. Enphase is right here at the 113 line again. And you know, Tesla's trying to figure out that same thing. Apple's actually doing really well. Apple's up like 68 bips over here. Bitcoin's push it. This is bullish. We break this, we move up today. It's just gonna slow up into the close. Hopefully, that's what you want. No, don't reject. Cross the line. The other way. Go the other way. So Robinhood went positive again. Palantir's still down 2.5. You've got the Qs over here again, also trying to sneak up. All right. I mean, look at this. It's such a volatile open here. It's pretty hard to say. And what else do we have? Here's Ethereum. Okay, Carvana, 125, big deal. The restaurants are down. Who cares? Let's see here. Google's rising. Cost is up 20% for a momentum play. AMC's up 2%. FICO up another 0.5%. The thing never stops going up, it feels like. There's Amazon kind of giving up on the retail sales rally. Enphase flat. Tesla's starting to consolidate already, which isn't great. Apple doing well, though. And Qs are rising. You know? Nvidia's almost green again. I think Nvidia's going to go green here. Qs are rising. Open Door bottomed out. Here's like a small cap. Very, very high risk. You know, this is like a $1.8 billion market cap. I hate the company, but whatever. You know, as a trade, it seems like it's, you know, bottomed there at about 2.5. Qs can't figure out what direction they want to go here. And, yeah, even Apple's coming down. Really interesting. All right, let's listen to, why do they have her from GM over here?
To $1 million just because the market's not developing, but we'll get there. And so we're going to be guided by the customer. But what I like to tell people is get in an electric vehicle and drive it. It's a lot of fun.
I gotta tell you, you gotta buy GM off this. They're losing money on these cars, I think. Ford is losing huge amount of money on EV. We don't want them to sell stuff they lose on. That's how you blow the quarter. Ford has been magnificent. GM's been fantastic.
What do you make of Ford's run last few days?
Ford's run is about Jim Farley saying, you know what, if we're not making money on something, we're not making it. And that's what we wanted from Ford. Not sales, but margins. Earnings. I think Ford's going to give you great numbers.
I think we're going for 5 straight on Ford, at least.
Deservedly. Jim Farley, this is his quarter. I think they ought to do 2 things. I think that they should sell even fewer EVs, and they should buy a lot of stock back, which they have. Look at GM, Mary Barr, when she announced that buyback. That stock's, Barr is great. I mean, all we ever do is talk about Musk, right?
Oh, Nvidia just went positive. Here we go. Okay, here comes the direction. Okay, Q's now going up. Nvidia just went positive. Etsy's up 1% after that retail sales data. Open Doors trying to move up. SoFi's not really moving. Affirm's not really moving. Tesla, Enphase getting a little stuck over here. And what's BTC doing? BTC's trying to break out. They'll come pick everything up here soon, hopefully. Yeah, here comes the sun, says someone. Exactly. QuantumScape's still rising. It's up what is this sucker? Up another 3.6%. Good lord. Yeah, these are definitely the movers today. So NVIDIA going green here. This is a very good sign. So we got NVIDIA we're going to watch. We got the Qs we're going to watch. We got, I'm keeping an eye on Open Door because that sucker's starting to run. Then I'm going to keep an eye on Shop because it has run. And then I'm going to keep an eye on GME. It's trying to pop up too. It's at 6% now. Then we'll watch Tesla. Oh, God, what the hell? Then you've got Enphase. It's only up, let's see. Yeah, Tesla is only up 0.25% now. Enphase is right under 113. I suspect that'll come back to 113. But Tesla gave up, which is really interesting. And Apple was the other one. Apple is giving up. There you go. So, yeah, red candle there on the Qs again. Wow, what a rough day in terms of like that. And this is what we felt in the pre-market too, in terms of like, okay, what direction are we gonna go in? And so it seems like the Qs are trying to say go up, you know, but feels a little barcodey. Let's try IWM just to compare the two. IWM's moving up nicely, and so are the Qs. Both of the indices are actually doing well here, with IWM outpacing for sure the Qs. So you're now on what, day 3 of rotation? So let's see here. Yeah, this is it started roughly last Friday. You know, and IWM's like up 10% since then. And then, yeah, look at this. Now you got Tesla and Enphase turn red out of nowhere, whereas Apple goes green. So it's like, oh, is it a rotation to small caps? Not necessarily. The Qs and Apple are still going up. And so is NVIDIA now. NVIDIA recovered its loss. Open Door is crushing it. Tesla and Enphase really got to bottom out here at some point in the morning. We'll see what happens. Let's listen in.
Where geopolitical risk has now outpaced inflation as the #1 tail risk.
Well, I just keep thinking now, how are you going to get the F-35 into the Straits of Formosa? I mean, how do you defend? I think how you defend Taiwan is going to become a major issue in this election. And I know President Trump has strong views. I'm calling him President Trump because he was president, okay? He has strong views about exactly how the Chinese should handle this issue. And from my sources, it's not exactly a discussion. It's more like a one-way tell. And he's not trying to get more business out of China. But, you know, Secretary Raimondo is the person running the China thing for Biden. No love there. I mean, she was hacked while she was, coming back from China.
What you make of Eamon's comments about the impact of a Vancian point of view on Ukraine? Fewer dollars for defense there. Would that put Raytheon or anybody else at risk?
Okay, I think that's a really great point. And I think that these companies are entrenched with Pentagon. They're not going to see less business. The Pentagon loves RTX, just loves them. They love Lockheed Martin. They love companies that make big hardware. Does that mean that they're not going to be able to make the $500 drone from Iran? No, but they're not very capable drones. But I think that I bet you Vance says, listen, we got to make more cheap military. And I wouldn't be surprised if he didn't say we have to have fewer men and women exposed to say, I mean, wouldn't every plane be shot down perhaps if it can't reach to defend? There's like, how do you put a carrier so close?
Okay, here we go. And while they're talking about China and all that stuff, the rotation started. The rotation really started in IWM around Wednesday of last year, but last week. And no, what I said last week was that I think there is a risk this could be the start of a recessionary sell-off unless we stabilize. We stabilized and things normalized, which is good. That's what I said Friday. Go back and watch the tapes. But anyway, looking for, trying to find like a floor coming to some of these stock moves, but you're not really seeing it right now. You're seeing, the Qs. The Qs are now rotating down a little bit more over here. So you got a little bit of it's just a lack of direction over here. Lack of direction on various stocks here. You tried recovering there on Tesla, tried forming a bottom on Tesla, tried forming a bottom on Enphase. This would be, I think people's stop losses are getting triggered right here. This might be the place to buy. This could be the entry for Enphase. This could be the entry for Tesla. Both of them are now trying to move up. Let me get my trading view. And IWM keeps going. Qs are coming back. Apple's trying to come back. You got Open Doors moving. And you've got NVIDIA. Nice move over here. Let me see. Let's see. Let's go to 1 minute. Okay, there we go. NVIDIA's pumping up again. Okay. Yeah, no confirmation yet of that uptrend. Here, what's Rivian's basically flattish. Okay, what about Enphase? Yeah, Enphase is about to go green. Oh yeah, big green candle there. Nice. And the Qs don't want to keep it up. The Qs do not want to hold up right now. So, but Tesla, Enphase, they're really trying to bottom out. And there goes NVIDIA again. It continue every time you get some red candles, it just comes right back. So hard to bet against any of them right now. But Bitcoin failed breakout there, 63.8. Not so fantastic. You're gonna keep trying that, is my guess today. Now let's go back to Jimbo for a moment.
But it was self-fulfilling. All these companies decided to just drill like crazy because Trump said you could drill like crazy. They weren't worried about methane. They weren't worried about flaring. And that lowered the price of oil, which made the stocks horrible. But people they should look at history. Now, I don't know, Vance, they got a lot of natural gas in Ohio.
Yes, they do.
I went to Ohio to see Chesapeake. And they said, listen, the oil's going to come up. Wait till you see the oil, and natural gas came up. Let down.
The big story in Pennsylvania as well. Maybe
Yes.
the most important state.
Now you're going to export all this natural gas. It's terrific for Vance. Sherrod Brown never really favors the oil companies.
Right. Nope, no, he does not. Dow's up 300, though, as we're up to 40,511. Seems just the other day, Jim, that we reclaimed 40K.
This is the most incredible bull market in history. Yeah. Built on negativity and pessimism.
Yes, as is usual.
Yes.
Watch bonds today as well, as we got the Powell comments yesterday, and the Fed speak continues pretty much all week long. We did get the 2-year at the lowest since February 7th, got to 442.
Money flowing in.
And then retail sales came along and got us back to 446. Stay with us.
Yeah, buddy. I actually thought the data was good. Inflation data good, retail sales data good. You know, none of it seemed that horribly offensive. So, you know, wasn't that freaked out. But yeah, you know, NVIDIA once again, red candle here, and then that's leading to a red candle on the Qs. NVIDIA really pulls those suckers down. Not uncommon. It's actually pretty dang common. We see that one over and over again. So then, yeah, Palantir's down a couple. BTC still slightly below there. Not great. And looking for like a solid bounce. I think that's really what's being sought here. There's Apple. Some fat red candles coming out of nowhere there for Apple. Just sort of bleeding down today. And yeah, the Qs are rotating down as well. Let's listen in to the good old Doomers for a moment here. And let's see what the Doomers have to say. So pop it up over here.
In this now very focused market of alternative credit or asset-backed credit.
How big is that asset-backed lending opportunity? Because everywhere we go across Wall Street, you see more and more private credit managers diving in.
It's a very big market, and there's a lot of similarities to what private corporate credit looked like just about 10 years ago when we started Blue Owl Rock, and a chance to really take an asset class, and we see the opportunity going forward in alternative credit to be analogous.
Who cares? Alternative. Who cares about this? Back off of this. This is boring. Okay, little Q's bounce there after a nice red candle.
This market, it's not an option.
Oh, okay. All right. So what else? What else? I'm looking at. I'm scrolling around looking to see if I can find some of the smaller ones we're not paying attention to right now. There are a few I've been keeping my eye on, but I'm watching just sort of the bottom of the list that we haven't been watching for a bit. And you've got Autodesk. Zoom out here for a moment. Autodesk has been honestly trying to sneak up. Look at Autodesk. Nice sneak up there from the 225. Also, Carnival Cruise Lines. Nice little sneak up over there. And then you've got the S&P 500. Nice climb, basically straight up. Super Micro. Ubiquity's killing it. Rocket Mortgage has another green day. ARM has another green day at 177. Microsoft. Chipotle's at 19 bips. Robinhood's recovering. Yeah, right now, let's see. Yeah, Robinhood's trying to form a little bottom there. Nvidia's down about 37 bips. Can't tell if you have a bottom here yet. At 250 on Tesla, it would be your expected bounce zone. And then you could see Enphase is running back to the 113, which is not uncommon. So these are your supports. Let's see if this is just the, sometimes what you get is the first 30 minutes, you have a sell-off. And then you kind of have the low of the day that gets marked. Sometimes. Who knows? Could also keep going. You're about to be 250 here on Tesla. So I'm watching that pretty closely. IWM's killing it. And the Qs really gave up. Open Door, Qs. Etsy. Etsy's done very nicely here. 3-4. Very nice. 3-4 today. That's our retail sales data. It's pushing Etsy right now. All right, what else? So we talked about the yield curve. Talked about, let me see where yields actually sit right now. Talked retail sales. Let's see, all the indices are green. Russell up 1.16. No, it's up more than that. Here, IWM's up 1.81. Oil's down a bit. Gold's at 24.50. Okay, Tesla's touching that 250 line now. Right there. See if it holds that. Look at that. Can you get the bounce right here? This is what you need. This is what you need right here. Bounce. And Nvidia there, 127. BTC, same spot. All right. Okay. Qs. Apple bounce. XRP. Let's see your comment there. Yeah, and even Nvidia's trying to pop up a little bit right here. All right. So, what else? Oh, okay. Let's see what else there might be in the way of news, good friends. Alrighty then. Andrew Tate banned from EU travel while he awaits trial. Wow. This gets banned from everything. Now banned from leaving Romania. Alright, well, at least he can leave his house. Russian nuclear plant malfunction, but radiation levels normal. Ogie. Dow hits high, intraday high. Pretty boring. Okay. Let's go back over here.
Rates are down, but I mentioned earlier that the local media is going to be a big winner because it still works when you're running for president, when you have these battleground states, and that's Nexstar Media, and it's NXST. It's an incredibly well-run company. It yields almost 4%. If you believe, like I do, that these PAC money can somehow end up in TV, Nexstar's your play.
But that's isolated. You're not making a broad call on media names.
No, you're making a one and done, too, because there will not be a lot of post-election money spent, but Nexstar's a really great company, and that's where the money goes, because there's empirical evidence that linear TV still works in terms of reaching voters.
Certainly the Redbird comments and Skydance comments coming into this Paramount world had, if you manage it right, Jeff Shell would argue, there is a future.
I think that's right, and Jeff Shell can manage it right. He obviously worked at NBC. I have to tell you that this could be linear's time. It works. I mean, having done local news, it works. I mean, that's how you reach people.
It would confound a lot of expectations. Jim, we're going to talk to Brian Moynihan in a moment. What's important going into this conversation?
Well, I think that Brian Moynihan's been able to make money where others haven't. Net interest income, obviously great. The canard about his bond portfolio and how dangerous it was.
Enphase is trying to break out over 113.40 right now.
Wrong. And the tenor of the company's business, if you look at this stock, this is the big winner for a long time. Brian Moynihan is not a promoter. He's an operator, and I can't wait to speak to him because he's a darn good operator.
Expenses up only 2 as well is the inverse of the conversation we were having on Friday with some other names.
And digital, they've got the best digital, and people don't realize they've spent a lot of money on technology. They have the best AI. They use AI in a very progressive, productive way. They do a lot of things great, and it all came together this quarter.
Jim's going to stick around for that conversation. Again, Brian Moynihan of Bank of America joining us just after this short break as the Dow's up almost 400, 40K, 606, and the S&P trying to get...
All right, let's go in over here.
The macro now. This is Bloomberg.
Oh, they're all going on the ads. All right, very well. So, okay, so let's see here. Q's falling... Yeah, we're about to go negative here on the Qs. That's pretty wild. Apple's trying to go positive again. I think Nvidia is really just dragging it. Nvidia is just tanking right now. Look at this tank on Nvidia. Holy smokes. Nvidia just getting absolutely rugged here. So, pretty wild. At the same time, you're getting a reject again on BTC. And you're getting, where is it? Yeah, Nvidia just keeps going down. Wow, look at that rapid decline there on Nvidia. Pretty remarkable. All right, we're going to go ahead and push the button. I'm going to make some more coffee, and we're going to head on over to the course live. Here we go. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Nice. And, oh, look at that. You're getting a recovery. Here you come. Just as I was getting ready to take off. Look at that. It's something to pay attention to. Look at this. 953. You have a recovery here. You had a bottom at about 946 on Enphase. 958. I'm gonna write this down. 958 Tesla. 945 Enphase. And 953 APL, but I think Nvidia is still tanking. Oh my gosh, yeah, Nvidia is absolutely getting wrecked. It's going right to 125. That's wild. Crazy. Okay, very well. And then Q's here. Q's dropping with NVIDIA. Very, very interesting. Okay, we're going to head over to Course Member Live. We'll see you soon. Thanks so much, folks. Goodbye.